The following presentation was made possible by the Alltech Media Group, a Southern California multimedia company providing exponential branding and marketing services to all their clients. The Alltech Media Group understands the value of the 3W strategy, providing their clients proven, trackable results. Let us make it easy for you to grow your business. Visit alltechmedia.com.
Our keynote speaker is a leading authority on the California state economy and its many regional economies. He plays a leading role in the Beacon Economics major consulting projects and is responsible for running and updating Beacon Economics quarterly state and metro area forecast models. He has been quoted by the New York Times, the Los Angeles Times, the Sacramento Bee, the San Jose Mercury News, Los Angeles Business Journal, KNX Radio in Los Angeles, and Capital Public Radio in Sacramento. Did they quote you accurately? He has also delivered presentations on the state budget and economy to the California State Comptroller's Council of Economic Advisors, to a wide variety of business and industry organizations, and to city and county governments across the state. Please welcome Economist and Director of Economic Research at Beacon Economics, Jordan Levine.
I'm excited to be here. I didn't realize when they told me I had 20 minutes that I'd have to shave about 5 for that horrendous bio. I'll talk to my company about that when I get back to the office later. But no, I'm excited to be here. This is one of my favorite places to come and do talks, in part because this is one of the places in California that I'm most optimistic about. And I want to talk a little bit about what's come down the pike and kind of where we see things going moving forward. Before digging into the local stuff, I figured it behooved us to start with a high-level overview. We did end last year on a pretty strong note. When you look at where the U.S. economy was heading overall, most major indicators moving in the right direction: jobs, corporate profits, GDP growth, all moving in the way that we would like to see them growing. So all in all, things are continuing to move in the right direction. We can put that recession in the rearview mirror, and in fact, California is on the leading edge of that growth. So this isn't just something that's happening in other parts of the U.S. This is happening right here in California. And as we'll see later, it's something that's even more true here in the city of Riverside and in the region in general. Economic growth this year, we think, is going to continue to get stronger. We had a pretty weak first quarter number, caused a lot of trepidation out there. For the most part, when you look at the underlying data and the fundamentals of the economy, we largely see that as a transitory first quarter effect, and we expect growth to start picking up in the subsequent quarters so that we finish off the year at about 2.5% growth on average. Watch the headwinds. I think most of them, fortunately, for better or worse, are external. So things that are happening in the rest of the world, what's going to happen with Asia, what's going to happen with our exchange rate. If we continue to see appreciation on that front, it kind of depresses our export potential by making our goods and services more expensive. But luckily, most of the issues that are potential problems out there are not necessarily to do with our fundamental internal balance sheets amongst U.S. households or corporations being over-leveraged, things like that. The equity markets are a bit frothy right now, but as I mentioned, corporate profits are near all-time highs, and so it's not like the 2000-2001 depression or recession, rather, where we had these very high valuations, not much profits to back those up. At least we're seeing earnings. Not to say that that can't be a problem going forward, but at the moment, at least those valuations are being backed up to a large extent by the earnings. Mentioned the weak GDP growth numbers. On the right-hand side, what I'm showing you is the average growth rate over the last 3 years in various quarters. And the point of showing you this graph is that ultimately I think the seasonal adjustment processes that we use to adjust for seasonal patterns in the economy are somewhat broken, because we've had this pretty systematic downshift in growth in the first quarter of every year for the last 3 years or so, and then we saw subsequent picking up in economic growth. And so I think those those old patterns, those old models that we use to adjust or predict how much of that downturn from December to January is due to the holiday season being over versus a downshift in economic activity, is starting to fall apart. We need to rethink some of those models. But overall, tracking pretty solid growth, over 3% 2013, again 2.5% in 2014. We expect 2015 to continue to improve. Locally is the area where I'm most excited. I think, cyclically, things are definitely moving in the right direction. I think, we got to stop talking about this as being a recovery. We can now start calling it an expansion. We're in the 5th year of the expansion, and virtually every indicator is moving in the right direction here locally. That's true if you're talking about jobs, if you're looking at home prices, new construction activity. We heard about all these great efforts on the education front. So things are really moving in the way that we want to see them going, and I want to talk about the pace of that growth because I think we're really starting to build some momentum. There's also been a lot of upward revisions to the past, right? So actually, what we found out this year is that the last 2 or 3 years have actually been much stronger from a growth perspective than what we were even told. So we were optimistic before, and now as we've seen that kind of borne out in the data, we continue to be even more optimistic about the region and the city of Riverside overall. Jobs, again, I mentioned that things were even better than we were told. Here's a kind of regional breakout, and look at where we stand now, where the Inland Empire overall has climbed up to 3rd place in terms of overall growth. That's over the last 12 months. We'll get the May numbers here, I believe, in the next couple of days on Friday. So we'll see if that gets maintained. But while we started out pretty slow, the big takeaway here is that we've really started to see that growth accelerate. And as we projected, we were a growth region prior to the downturn. We were one of the places in California that was experiencing rapid growth. We were harder hit by the downturn. There's no doubt about that. But now that we've started to build some momentum, we've jumped back up to the top of the pack, and we're one of California's growth regions once again. And I think that's a feature that we're going to see maintained over the next couple of years. Of course, the revisions are hugely important. As I mentioned, we see these monthly employment releases and we say, oh, the Inland Empire added 30,000 jobs, we added 10,000 jobs, whatever the case may be. Keep in mind, those are just survey-based estimates. They go back once a year and recalibrate those to match up with the actual employer filings. And what we saw this year around was that actually, whereas in 2014 they said, we started to see a downshift in growth, economic and job growth started to taper off into that 2.5–3% range. Well, fast forward to May or March 2015, and they said, oh, actually, hold on a second. We actually maintained a really solid pace of growth in that 4.5% to 5% range through the vast majority of 2014 and into 2015. That has continued to be maintained. So not only are things moving in the right direction, when you hear these monthly economic indicators get released, keep in mind that those are survey-based numbers and that things are likely even better than what you're hearing out there in the media each month. Private sector employment here in Riverside, and this is something I'm especially excited to be able to share thanks to our partnership with the Chamber and the city as well. We're able to actually take this down in a way that not a lot of other cities do, where we can zoom in and not just talk about regional trends, but talk about what's happening right here in the city of Riverside. And in fact, we're seeing most of those same exact trends borne out here in the city. In fact, we're back up above 70,000 private sector jobs in the city of Riverside. When you throw in the other 20,000, 25,000 state, local, federal government jobs as well, we're getting close to that 95,000 jobs number, and things are clearly moving in the right direction. In fact, for the most part, we've been matching growth in the region overall, which again is outpacing the state by a pretty fair margin. So this isn't just something that's happening in the Cabazons or other parts of the region or the Palm Springs areas. This is something that we're seeing right here in the city of Riverside. And I think, we see it anecdotally when we walk around the downtown area and look at what's happened at the convention center and the municipal auditorium and things like that. But we're also seeing that borne out in the data. So again, that optimism that we had is really starting to show itself in terms of growth in the economy here in the city. The other thing that gives me, a lot of sense of optimism is that we're not just hanging our hat on one particular sector. In fact, with the exception of mining, which is a pretty marginal component of the local economy here in the city, every single major industry is on the rise. There's some that are doing a little bit better than others, but I think unlike the last bubble and subsequent recession where construction and real estate was really driving the day, now we're starting to see more broad-based and robust growth across all sectors of the economy, so that we're a little bit less susceptible to any one particular industry facing difficulties and taking down the whole economy. So not only are we growing faster than the state overall, this is something that's pretty broad-based all the way across the spectrum of industries here in the city. Of course, it's not just jobs, right? I always like to remind folks that the labor markets are a lagging indicator, right? You don't go out and hire folks, and I think chamber members will know this better than most, but you don't go out and beef up your staff and then say, I hope I get those extra sales this year that I'm hoping for. No, you wait till that demand builds up, then you start to hire to meet that demand. And luckily, those forward-looking indicators are really moving in the right direction. In fact, when you look at taxable sales here in the city, that's spending by businesses and consumers that are taxable. We've gotten back up above that pre-recession peak. So, in fact, we've seen more spending in the city of Riverside than we have at any other point in time, including at the height of the last bubble. And that's something where, again, we're actually punching above our weight. And you can see that the growth rates, although they've decelerated down from the kind of 10% range down into the 5% year over year, we're still outpacing California. And in fact, this is an area where we're outpacing even the Inland Empire regional economy, which is doing pretty well in relative terms. And of course, again, punching above our weight, it's not just something where we're outpacing the rest of the region. Yes, we're outpacing some of the other big cities in the Inland Empire, but we're also outpacing growth in a lot of these other major cities across Southern California in general. So, this is something where, again, doing well and doing better even than what you see happening in other places. So again, when we talk about having a sense of optimism, it's not just that we're being dragged along by the broader economic trends. We're really a driving force in what's happening in California right now. Again, spending has been really broad-based, okay, with the exception of fuel and service stations, which is a function of the fact that we don't have to pay $5.50 a gallon for gas anymore. Most major categories of spending are up. So we're seeing jumps in building and construction materials. We're seeing spending at restaurants and hotels. Folks are feeling more comfortable going out and eating, taking their families out to eat, maybe taking that trip, taking a night out in the hotel. So again, this is really broad-based across all major aspects, even of the real retail side of the market. And of course, housing has been a consistent positive, at least from a price perspective. I think this raises some longer-term issues, but for the most part, the cyclical aspects of the housing market are far behind us. We've seen pretty consistent growth in home prices. Home sales have been pretty lackluster, but a big part of that is the fact that we don't have as many of those distressed units out there. So sales were being artificially boosted up by the fact that there was all these defaults, foreclosed properties out on the market that were being gobbled up by owners, investors, things like that. A lot of that inventory of distressed properties has gone away, and we've gone back to a more retail-driven market, if that's the right term for it, in terms of owner-occupied housing. So sales have tapered off a bit, but with mortgage rates really low and the economy continuing to improve, we expect that sales number to continue to rise. I get questions on the other side of that coin that says, well, are we in a bubble then? We have seen a lot of really consistent growth in home prices. Is this something that we need to start worrying about? And I would say yes and no, or maybe yes with an asterisk. I think, at the current point in time, we're still miles away from where we were at the height of the bubble. We have recovered about $100,000 on our median price, but we're still about $120,000 cheaper than where we were back in 2006-07. So, we haven't gotten up to those excessive levels, and keep in mind that over those past 5-6 years, incomes have grown, albeit at a slow pace, but we're a little bit more we earn a little bit more in terms of our average income that can support a modestly higher home price. And in fact, when you look at it from an affordability standpoint, given that incomes have risen, and in fact, mortgage interest rates have actually tapered back down slightly over the last couple of months, what we've seen is that housing affordability has actually improved somewhat over the last 6 months. In fact, the median home price across the state relative to median incomes, taking into account those very low interest rates, is still below 30% of what that median household income is. So, until we get back up into a point where we have payments that are going to be unsustainable relative to what folks make, I'm not worried about a bubble yet. That said, the high cost of housing in California is one of our biggest challenges from a long-term perspective. So, from a cyclical perspective, yes, everybody's building equity, and that's great. From a long-run perspective, need to figure out how to get those housing costs under control. The good news is this is happening across the state, and in fact, what we're seeing is that we're getting some very healthy growth, about 9% or so in the city of Riverside. But fortunately, we're seeing other places have home price growth that's even faster. And folks say, well, why is that good? We want to have the fastest growing economy. Not in terms of home prices. I think as you see these very excessive prices get even more excessive in places like Los Angeles, what you're going to see is that affordability gap, which I'm showing you on the right-hand side, that's this red line. That's the percent of money that you would save by moving to Riverside from a place like the city of Los Angeles. And so as they get up into the $680,000, $700,000, $800,000 median prices, places like the city of Riverside, which have modernized their downtown, don't have the nightmare LAUSD hanging over their head, things like that, the better quality of life. I think that, those 40% savings are going to become real financial incentives along with the quality of life considerations. And we've seen that in the past. When we've seen big upticks in that relative affordability of the amount of money that you save, what you see is a corresponding uptick about 3 to 4 years down the road in population growth to the city of Riverside. And so we're right at that kind of turning point, that inflection point where affordability is really high. And I think now we've got those quality of life marketing advantages as well, that we're going to start to see this population growth number start to pick up in response to that. So for me, that's a real asset that we have moving forward as well. Luckily, this is starting to give way to new construction. We haven't seen much on the multifamily side in terms of new permits, although we did hear about that great project that's happening downtown. But we have seen some single-family permitting happen so far this year. Through the first 4 months, I think almost 80 new single-family homes being permitted. Keep in mind, this is still early days, right? January through April, which is what this data covers, isn't necessarily the hotbed for going out and filing permits and doing things like that. But we have seen these positive trends on housing start to give way towards new construction, and I think that's one of the key ways that we can keep those housing costs under control, right? Fundamentally, it comes down to a supply and demand question, and as demand rises, we're going to need to make sure that we have those commensurate upticks in supply so that we don't get these kind of price spikes and we end up eroding one of our biggest advantages locally. Non-residential construction is also coming around. It's been a bit more of a bumpy road, even regionally, which I'm showing you on the left-hand side. We have seen a pretty solid uptick in non-residential permitting, but you can see here in the city, which I'm showing you on the right, how that activity's been distributed. For the most part, it's still concentrated on alterations and additions to existing space. Now, for me, this is a real important number, not just because it's generating, new construction activity and supporting construction jobs and generating permit fees and things like that and helping to contribute to general fund revenues. But these are also, oftentimes the biggest precursors to an expansion, new structures being put up. And in fact, we're already starting to see the pangs of that with some new office, some new retail, and in hotel investments. But for the most part, we're still seeing that activity concentrated in alterations. So that's a good thing in and of itself, but it's also, I think, a positive implication for where we see the construction market going heading forward. And I think that's, towards more new structures locally. And we're already starting to see that to some extent through the first part of this year with some new office and hotel permits that are growing in a pretty big way, as well as other new non-residential. That's things like medical office buildings and other things like that. But pretty broad-based growth, again, that isn't just concentrated in, your hotels. It isn't just your tourist jobs or things like that driving the day. It isn't just part-time jobs. We're seeing, pretty permanent investments being made in the city of Riverside that's translating into broad-based growth across virtually every part of the local economy. So for me, I think when I go out and talk these days, I'm doing less kind of convincing folks that things are getting better and more trying to get folks to start to transition mentally towards getting out of a recessionary framework. I think from the data that I've showed you, I think it's pretty clear and unequivocal that the worst is behind us. Every major indicator is growing, and so for me, it's less about what can we do to kickstart this economy. The economy is kickstarted. It's what can we do to start looking ahead, and I think it's time to start thinking about how we tackle those long-term challenges that have built up or been bubbling under the surface maybe for decades, years and decades, and maybe more. And these are just kind of a smattering of those that I think we need to tackle. Education, of course, is key, and we've heard a lot of great initiatives happening on the education front. The education gap between other parts of Southern California has been closing up pretty dramatically over the last 5-10 years. That's something that we need to continue to do. We need to offer the highest skilled workforce and be able to lure businesses in and grow our own domestic industries that much stronger. Of course, that's critical. Infrastructure is going to be key, right? We talk about both employment growth and solid population growth. The Beacon's projecting going forward. That's going to take not only increased housing supply, but we're going to need to make sure that we've got the infrastructure that can accommodate that extra size of an economy. And of course, I think looking at stuff at the state level and local level in terms of CEQA and regulations and how do we make it a little bit easier to do business are things that I think now we have the financial wherewithal as revenues increase and budgets start to improve to start thinking about some of these bigger issues that we can now hopefully start to tackle, that we're not in a kind of crisis management mode. I think we have a lot of opportunities out here in Riverside specifically, and this is again one of the areas that I'm most optimistic about because we have the affordability. We've got very high skilled commuters. I talked about the fact that we've closed that education gap. That's highly true, and we've attracted a lot of high-skilled folks in from those coastal areas, but in large part, many of those folks still drive across the county line to go to work in Orange County and San Diego and Los Angeles, and I think that's a huge marketing asset that we can go out there and say, look, we're working on, building up that skilled workforce, but we've got a lot of skilled folks here already that we could tap into and leverage over the short run while we work on progressing towards those longer term goals. And I think the colleges and universities all across the region are another huge asset that we can capitalize on, right? We have over 35,000 students, I think, throughout the region at our various institutions. What can we do to keep those folks local, get them to start their own businesses, join up at firms here locally, and really catalyze more growth, right? The one thing we don't want to do is bring those folks in, train them up, and then have them take those skills back to wherever it was they came from. Let's get them to stay here in Riverside and help to catalyze even more growth locally going forward. So for me, the recession's gone. That's in the rearview mirror. It's not even a recovery anymore. It's an expansion. So with that, we should really start to think about some of those long-term challenges and what we need to do to ensure that growth remains robust, not just for the next 2 or 3 years, but for the next 10, 20, 30. So thank you so much. Really happy to be here.